Hi everyone, just give it one more minute. Just to let you know, I have a little bit of a cold, so I might occasionally have to cough. And please don't take that away from the experience of this webinar. But yeah, I apologise in advance. Hi Jackie. Nice to see you back again. Right, okay, everyone, let's get going. Yeah, I think the trends of January, well, December and January of this year have seemingly sort of come back in. But is this the right time to start selling the dollar again? That would be the question I would be asking, because there's some massive levels that the dollar is now testing that would be big outlook changing levels. And the dollar is stretched, certainly at the moment. Yes, the selling pressure has taken hold, and yes, you sort of could continue to ride that lower. Is it going to be a trend that continues to the downside, though, on the dollar? And let's have a look at this dollar index chart, for example. Now, what we have seen is these massive selling pressure days in the last sort of few days. Big bounce today. Is this a bounce that suggests that maybe there's been a bit of exhaustion in this dollar move in the near term? And I stress that in the near term, because I think long term we are still going lower. Dollar breaking down below sort of 1991 on dollar index is a big level. Just move that out of the way. Big level, and I think that ultimately that sort of opens up sort of this range here, sort of 82, 84, maybe even 80 on dollar index, and obviously that is back from 88. That's another 10% of decline. And you could argue that the dollar is still overbought. I mean, euro dollar on a trade weighted basis is generally around about sort of 32, 33, 34 maybe. So there is still room for weakness, I think, on the dollar in that regard, and that would be a driver of the dollar to the downside. And if you look at the yen, for example, I think the trade weighted, fair value of the yen is in the 80s, so against the dollar. So you could easily see some further weakness in the dollar this year. I mean, there's a big concern about the size of the trade deficit, and I think that is the reason why that the dollar is not benefiting on the back of these treasury yields moving higher. Now, what we have seen is the initial volatility of early February has sort of now come out of the market. You can see that on the VIX. VIX is spiked back lower again, and that is certainly helping equity markets to rebound. You can almost see an equal and opposite move on the S&P 500 and the VIX. I mean, to be honest, they are deeply linked to each other, so that's not to be unexpected. So what we do have, I think, is an equity market outlook that is bouncing. You've seen that the moves today on equities are showing that. But also you've seen dollar weakness. But will this dollar weakness continue in the near term? I'm sort of a little bit sort of concerned that maybe we could be at the brink of a little bit of a turnaround. And I say a little turnaround because obviously what we have seen is sharp run higher. But look at this euro dollar. Had a look at that resistance, that 25.35 resistance, and came down from 25.55 today. It's already unwound sort of 70 ticks from that, 70 pips from that. Now, on euro dollar, the average to range is 110 pips, so there is still move potentially to the downside in this sort of retracement move. But the question would be, when do you start to think about selling the dollar again? Just a quick question from Tom. You have mentioned the treasury yields before. Can you go over that correlation if you have time? Yes, I can. Now, basically, what we have seen. Let me just show you a really important chart, I think. This is the 10-year treasury yield spread versus dollar yen. Now you can see from Q4 2016, they sort of match each other almost perfectly. That is basically whereby the yields on treasuries are pushing out, whereas the Japanese yen, Japanese JGBs are not pushing out. So basically, what you do is you see the currency traders moving in towards the higher yielding currency, and that certainly played a role throughout all these moves throughout 2017. But then look at this, 2018. Look at that divergence. Dollar yen massively lower, yield spread massively higher. So there is a massive divergence in that yield spread and the dollar yen move. That is a very good example of the fact that the markets have been uncorrelated on these yield spreads. And this is, I think, a factor that the market is playing into. Is not they're not really looking at yields at the moment. You've got treasury yields which are continuing to move higher. Markets are not really interested in that at the moment because you've got other treasury yields you've got other yields such as the Bund yield and gilts also moving out higher, and you've got other central banks that are beginning to position for more tighter monetary policy. Subsequently, that would be the US Fed losing its first mover advantage, and subsequently the dollar will struggle on the back of that. Given the fact that also you've got twin deficits in the States, I think that's going to drive a weaker dollar in throughout 2016. So, where does that leave us here? Well, you've got dollar weakness that is impacting across FX markets and commodities. You've got the gold price, which has resumed higher, looking at 1366 again. I think gold could be a buy. Well, gold is now a buy into weakness. And look at this longer term chart on gold. Look at the importance of that's 1375 there from July 2016, although it says 1366, that's the line. And 1391 is a massive level from 2014. If you break through that on gold, you're in gold bull market territory, really strong bull market territory. And that is really interesting because I think that we are looking at a gold price which could be on the brink of something quite important in that regard. You've also got the oil price, which is turning around again. You had that weakness on the back of the dollar recovery, minor recovery in the dollar, and then that is now bottoming out. You can see that across the momentum indicators. You can see the WTI breaking higher, breaking a sequence of lower highs. So you've got all these factors that I think are playing into the markets at the moment. Now let me just have look at a couple of the questions. Looks like a bit of a double top on Eurodollar from John. Yeah, I'm not sure. I mean, I had also sort of read that somewhere else, but I think until you see a move below 22 figure, which is that reaction low there, from that initial dollar strength, I don't think you can really argue that on a technical basis. Now, there is, I suppose, an argument of to the market potentially rolling over on the momentum indicators on a medium-term basis, but I think you'd need a lot more evidence of that. And I think ultimately, if Eurodollar starts to find a bit of support, then I think it's going to be a buying opportunity. Question from Tom: if yields pull back, does dollar yen go higher? I think the fact that the dollar yen is so weak at the moment has been driven by sort of expectation that the market is sort of shifting a little bit on the Bank of Japan. Now maybe ultimately there could be a bit of disappointment and there could be a retracement of that move, and subsequently we see the dollar yen pulling higher. But if we look at dollar yen on a longer term basis, you've got this big breakdown of this range that we've been in for almost a year, and that's a 700 pip range, and the market sort of tested higher, tested lower, tested higher, tested lower, and then eventually broke to the downside. Now, if you see a failure on a rebound, if you see a failure at 107.30 to 108.30, these two lows here, that becomes a selling opportunity. You've got certainly room to do that, and if you measure 700 pips of that on a longer term basis, what does that give you? Breakdown from 107.30, 100 big figure, all these big lows from 2016 come back into play. So this is a really important move. I think near term, you've got the RSI 23. That is the lowest we've had since 2016, but then you could sort of move that back further. But within that move, you do get these rallies. So the fact is that dollar yen is oversold, but you could see a bit of a near-term bounce, and I think an opportunity 107.30 to 108.30 is ideal on dollar yen for sort of a longer-term selling opportunity. So right. Yeah, I've put here down the bottom. Okay, Brexit is a big factor. This weekend we've got a speech by Theresa May, and that could subsequently mean anyone trading sterling over the weekend and leaving positions open could be in line for a shock, because if she comes out with something crazy, let's not rule that out, then we could see a significant move either pro sterling or against sterling. So we need to bear that in mind, because Brexit politics have a big part to play in how sterling moves at the moment. So we could see a gap on Monday. So be careful of that, I would say. I've put here trade management. I always talk about this, average true ranges. Okay, average true range is the, I think, is it 20-day? Actually, I've got mine set up as 14, looking at it. 14-day average of daily ranges. And at the moment, they are the moves that we've seen today could continue. The rebound moves on the dollar. I mean, say, for example, I'm looking at dollar yen here. Let me get my chart of dollar yen on an average true range basis. Here we see 102 pips of range. Now we've had 105.50 to 106.34, so that's what, 80 pips. So in terms of the volatility of intraday ranges, we haven't seen all of it yet on dollar yen. So we could see a little bit further of a bounce. But as I said, 107.30 to 108.30 would be ideal on dollar yen. I've got this. I did this idea today, or talked about selling dollar CAD. Now we've got an oil price which is rallying, and we've got a dollar weakening. Now the question is that going to continue? As I said, in today's morning report, you've got this big resistance band around 26.50. Now, unfortunately, I mean, I was looking at this trade yesterday when the market had rallied towards sort of 25.30 area. I was thinking, well, that's almost ideal. You could have a stop above this pivot, and it would look, I think, very interesting for this rally being sold into to the downside. What we could see is a recovery, as a very near-term bounce on the dollar, as this market has got so overstretched, and it sort of pulls back from these key levels against the euro. And what we could see is a bit of a knee-jerk bounce on dollar CAD. Now, I would be selling into that rally. You've got this sort of topping pattern here. 25.50 was the neckline of breakdown. That is also a bit of a pivot as well. Had yesterday's rally to 25.37. That failed. You've got all these moving averages falling. The momentum indicators are negatively configured. Look at the RSI and the MACD lines. MACD failing underneath neutral. RSI, yeah, you had a bit of a spike a couple of days ago, but generally underneath sort of 50 to 60. So an unwinding move towards sort of 55, 60 area could well be that opportunity for dollar CAD to be sold. Now, very, very slight bit of a pivot around 24.80. I've sort of written that on here, 24 to 25, 24.80 to 25 figure. So you'd be sort of looking at your selling opportunities within this sort of range here, near term. If you want a more considered selling opportunity on a sort of give it a little bit of a wider time scale, you'd sort of wait until it rallied back towards that 25.50 area. But it certainly looks as though dollar CAD is a selling opportunity there, because as I said, I think dollar is going down near term. And medium term throughout this year. Buying Euro Aussie. Now this is an interesting one. This is sort of a play on Euro ECB strength. It's sort of oh no, that's Euro. That's the one I'm looking for. It's been ranging a bit, isn't it? And it's sort of lost a little bit of the momentum. But I think an unwinding move back towards sort of 56 figure area. That's a decent support. And then you've got this pivot around 54.60, 54 towards 55 area. So a decent support now. So I'd be looking at buying into weakness on Euro Aussie. what are we doing in terms of uptrends? Well, you do have a fairly reasonable uptrend on that as well. Comes in lower, so you are stretched away from that uptrend. You look at these momentum indicators, just touching in a sort of rolling over basis. So something to watch out for there. Okay, just a quick question from John. Any additional insights on Trump's strong move into oil leasing? John, I'll be honest with you, I haven't looked at oil leasing for the States, so I don't really have anything to add on that. Abbas, yields are rising, inflation data was a bit promising, but still the dollar is going down. What is your say on this? Well, I've been looking at this, and I think that the market sort of looked at the fact that CPI was due to fall. It didn't. It held flat. PPI ticked higher very slightly. So the market is sort of looking at the fact that inflation didn't rise on the CPI basis. It basically held flat. So there wasn't an upside surprise in that to really stoke the fires of inflation. Now, we've got the PCE data in a couple of weeks' time. That's going to be key. But the fact is that we've got the yields that are moving higher because there is an inflation story in the States, and the yields rising on the back of that. However, the CPI data was not enough to really sort of stoke expectations that the Fed's going to be sort of forced into accelerating or more aggressive rate hikes. So I think that's why we saw yields rising and the dollar falling on the back of that. So where are we? Buy gold. Well, yeah, I think buying gold is again a play on that weaker dollar on a sort of a longer term basis. Where would you buy it? Well, you've got the support around 1248, 1244. These couple of low highs, old highs here. Actually, that's 51. So we've got some support between 1344, 1350 area. You could see an unwinding move near term as the dollar strengthens. It looks like the dollar could be, as I said, in line for a bit of a rally today. How far that rally goes remains to be seen, but any sort of unwinding move that starts to roll over again, I think, on the dollar will be seen as a chance to trade against the dollar, and that would subsequently mean gold pulling higher. And I think 1366 is clearly key on gold. Yeah, that's where we're looking at. So basically, sort of, I mean, to cut a long story short today, all these trades I've got, I'm not sure are decent levels yet. And I think we need to just be a little bit careful, considering that the dollar has started to unwind some of the weakness a little bit today. And there are opportunities that are going to be presenting themselves, but arguably not yet today. So what you'd be looking at for is gold forming support between that 1344 to 1351 area. You'd be looking for Euro Aussie to forming support around 56 figure area. You'd be looking for dollar CAD to be forming resistance sort of around 25.50 area. So there are potentials out there if you sort of can pick the right levels. But as I said here, looking to sell the US dollar into strength, and all these plays that I'm talking about are dependent on dollar strength. I put 88 to 89.50 on dollar index. Here you see dollar index. If you had that as a candlestick, that would be a potential bull hammer. 89 to 89.50 is sort of a mild retracement within this renewed sell-off, probably sort of around about halfway of that move. But you've still got this downtrend in play of the selling pressure that we've seen since December. And any sort of unwinding move next week into that area would probably give us that opportunity. Now, we've got President's Day on Monday. We've also got Chinese New Year. So it's going to be low volumes next week, early next week. And subsequently, we could see a bit of a quiet mood of trading. But I think this dollar is still a sell, but I'm not a massive fan of selling at these levels. So there we go. So I've sort of been talking a bit today. I didn't put any trades on, as I said, because I think that the markets are not really at perfect levels, really, and We need to think about average true ranges. Need to think about how the fact that markets are still trading with a degree of volatility. So all this needs to be kept into consideration. So with that in mind, I wish you good luck in your trading, and I will speak to you again next week. Thank you.